Welcome back to another video. Today there is lots to talk about. The market is in absolute free fall mode. If we look at the S&P 500 on a 1 year, we're officially down 2.5% on a full 1 year basis. And from its highs in the S&P 500, it peaked at around 6,100, a little bit more than that. But from there, it's down 17%. And if we look just at like a 5-day chart here, obviously in the last 2 trading days, the whole S&P was down 10.5%, that is ridiculous. 10.5% down in the S&P 500 in 2 trading days. Obviously, this is when the tariff announcement came out and the market just obviously reacted very negatively to that. If we look at the NASDAQ on a 1 year, it's also been pretty crushed so far in year to date. From its highs, it's down around 22, a little bit more than 22%. So the NASDAQ is officially in bear market territory. We'll say an index is in bear market territory when it's about 20% down. That is officially a bear market, and the NASDAQ is, I believe that was its high, around, 20, it went over 20,000, and it's currently trading at 1550. So the last time we were in a bear market with the NASDAQ was from the 2021-2022 crash era, where it peaked around pretty close to the levels it's trading at now, actually, and then it crashed about 35%. So we're only down like 22% right now. In the last bear market that we were in, it was down 35%. So this can definitely still continue to get a lot worse. And the reason that it was down in 2022 was obviously during this time, like off the tail end of COVID, the Fed printed a lot of money and just flooded a lot of money into the market. And then obviously that kind of led to inflated valuations and high sticky inflation. So this is when the Fed really started to raise interest rates to try to drop inflation. And we kind of went into a bear market for about, like it came down for about a full year. And so that was, 35%. So we still technically have a little bit more to go, or we can definitely see the market continue to drop further than just where it's at right now. Obviously in COVID was the last one before that, and the market dropped really sharply and then recovered pretty quickly from there. But I do think one thing is this situation is a little bit different than the COVID situation, because obviously in COVID, the market crashed super fast. And in the last 2 days, like I said, we dropped like over 10% in the S&P 500. We haven't had numbers like that since the COVID crash. And obviously, when that happened, the Fed came out and decided to really quickly bail out the economy, right? Like when the market crashed during COVID, the Fed stepped in and was like, yo, here's like a couple $1 trillion. Pretty quick. They were there to support it and there to bail out a lot of big companies. And in this situation, it is a little bit different. The Federal Reserve has come out and said, it's kind of too soon to say what will be the appropriate path for monetary policy. And, you get headlines like the Fed isn't rushing to save the market this time. And Jerome Powell has come out and said that, they're kind of waiting to see what happens with tariffs, how companies react, and what kind of reciprocal tariffs other countries put on the United States. And just, there's so much uncertainty that the Fed has basically said, we are not doing anything right now. We're kind of waiting to see how this plays out. They have come out and said that there is projections of a higher chance of a recession, albeit still relatively low projections. So it's been a crazy time in the market. And, even off the back end of all of that news, obviously the fear and greed index has been cranking is just about as much as it possibly can. The scale goes from 0 to 100, and right now it's at 4 on the index. So I made a video not that long ago, and like we were still trading in extreme fear, but I literally said that this can get a lot worse. And I mean, it has gotten a lot worse. Even Jerome Powell said that the impacts, like the tariffs that got announced, were a lot worse than expected. So the market is in absolute panic mode. right? Like there is like it is a peak example of extreme fear in the market. And if we look at something like the volatility index on a let's just look at like 5 days, see where it's trading. So it's currently at 45, which is a very elevated level for the VIX. That you do not see the VIX trading or the VIX at a 45 level very often, right? In fact, in a 1 year, even in August, it peaked at around 38. And then a 5 year, or let's just look at max. Like obviously it hit like 65 during COVID. And then before that, you got to go back pretty far, like 2011, 2010, and then the great financial crisis in 2008. Obviously, the VIX was obviously spiked there as well. Now, let me ask you this. Let me ask you, what is something that is in common with all of these periods that the VIX is trading at super elevated levels, call it over 40? The thing that is in common with all those is historically it has been a fantastic opportunity to enter the market. And they have all turned out to be very, very good buying opportunities. And in hindsight, everybody always wishes that they get in when the VIX is spiking. And as stock market investors, guys, these are the times that we should be living for, right? Like you should all be excited that this is how the market is acting right now, because we don't really get these opportunities that often in the market. I think only like on average, it's like every 2 years, like to 18 months that the market goes into a bear market cycle. And so it doesn't come around that often. And you have to understand that if you have a long-term mindset, which you should, that the price of admission into the market is volatility. That is what you're going to have to deal with if you want to put yourself in a good situation to be successful in the stock market long term. You're going to have to learn how to stomach and how to deal with volatility. And I get it. It sucks to see your portfolio go down, 5, 10, 20%. But, you have to learn how to almost emotionally remove yourself from these numbers. Just close your portfolio on days that it's a big down day, or buy or open it up and buy stocks. But you have to learn how to deal with the volatility, and it really is the price that you pay for admission into the market. And let's pull up my personal portfolio, just so you know, I am also dealing with this situation. So we hit a high in the accounts of around $89,000, call it $90,000 in like mid-February. And since then, it has been a bloodbath, guys. It has not been good at all, right? Like now we're trading down at around $70,000. That's a swing of about $20K in the account in the last month. And this just goes to show that, markets can move fast. Things happen quick in the market, and, things can turn around just as fast as well. But when the market is fueled with uncertainty, you have to be prepared and for your accounts to go down, and the market literally just never fails to be unpredictable. But I'll take it, honestly, because this presents opportunities in the market, and this is where, like I said, this is what we live for as individual stock market investors. So these are all my personal positions that I have in the market. You can see all of the percentage returns that I have. I ain't hiding nothing. I'm also not claiming to be an expert here, guys, and I'm just some guy that's been investing in the market for 5 years, and I like to share what I've learned along the way, and I am literally here to learn just as much as anybody watching this video. So if you are interested in staying updated on the market, I just make videos on the market, then subscribe to the channel, and let's go on this crazy journey of investing and learning how to build our portfolios together. Now, I want to dive more specifically into a couple of stocks here. And I want to start with something like an AMD, because, oh my God, AMD is getting just absolutely crushed, right? Like they had down 9%. It's just ridiculous. And on a 5 year or like a 1 year, it's down 52% on a 1 year chart now. I started my AMD position at, what was my cost basis here? $117 is my cost basis on AMD. And so it's trading well below my cost basis, and I would be adding to this position if I had, a lot of, quote, dry powder to add into the market right now. I just don't have a lot of cash around, unfortunately. I'm still in school, so I graduate school in a month, and then hopefully I can get a job, but that's kind of it's just a whole different conversation. But it's kind of unfortunate that I can't really take advantage of a lot of these opportunities right now. Because $85 on AMD, that's looking really good, right? From a valuation standpoint. And I've made videos in the past on AMD, and I highly recommend, if you're interested in this stock, to go check out that video. I go way more in depth. I just posted it I think a month ago. I go way more in depth onto the fundamentals of the company. But one of the reasons that AMD has been really hit recently with the tariffs, 9%, same with something like an Apple, which we'll look at, is because, they lean on China to do a lot of their business. They have manufacturing there, they sell their products there, and now it's kind of uncertain as to what that whole side of the business is going to look like, and that's driving down the valuation of the company. And obviously 86 or $85, that's looking pretty good. And I'm not going to lie, as a long-term prospect, to be an AMD shareholder right now, I like how it's sitting still, and I would love to get buy a little bit more shares and continue to average down my position at $85. If we look at something like an Apple, Apple, this I want to touch on this too, because this does not happen in the market very often, where you see Apple and you look at their share price and it's down 7% on a single trading day. Something's going crazy in the market if you see Apple down 7%, right? Apple's typically one of the stocks that holds up the rest of the market, and everybody kind of comes to Apple for stability. But down 7% on Apple, that's crazy. That does not happen very often. I can't even remember the last time that Apple stock was down that much, if they've ever been down that much in the last 5 years on a single trading day like that. This is a 5-year chart of Apple. I don't think they've ever been down this much on a single trading day. I could be wrong. I don't know for sure, but that really is crazy. I can't imagine the market cap value. I wonder if we look at 5 month, if the data's posted. Since April 2nd, they went from a $3.3 trillion company to a 2.8. So they lost roughly what is that? $500 billion in market cap value. In just a little bit. So, and you hear these numbers the stock market lost $3 trillion, right? And when you think about that in terms of Apple is 1/6 of what that would be. So this is the big dog in the market, and it's good to pay attention to what Apple's doing. Obviously, they have lots of ties, just like AMD, to China. They have lots of manufacturing there. They have they sell lots of products there, even though I do believe that recently their segment in China and their sales have been going down a little bit. I went through their latest earnings report, and I think they did drop a little bit in sales in China recently. So I don't know. They're also announced that they are moving production facilities into the United States. They're making, I think it was a $500 billion investment into manufacturing in America. But guys, that takes time. That takes a long time to build these facilities and get all of the equipment and people and resources and everything that's involved with moving a big facility into, or just starting up a new one. It takes years even. So obviously that's what is hitting Apple so hard right now. And then we can also look at a more retail investor focused stock, something like a SoFi. SoFi is, honestly, I do really like SoFi. It's never been a stock that I've owned, but it has been one that I've paid attention to and have been interested in. They're trading at a $10 billion market cap right now, and they hit highs of around $18. So they got chopped in half in the last, probably since beginning of the year. Yeah, year to date, they're down about 37%, and from its highs, it's probably down around 50. Obviously, again, provides various financial services in the United States, Latin America, Canada, Hong Kong. I don't necessarily know how SoFi's services, obviously, it's a financial company, right? So I don't know how their services would be tariffed, if tariffed at all. But again, that kind of goes into the uncertainty that's fueling the market right now. But I think this would be an entry point opportunity for something like SoFi, right? On a 5-year, it's basically chopped all of the last year's gains, or not quite the last year's, but last, call it 6 months of gains. So if you think about it, is SoFi's business from 6 months ago, have they made any progress at all? Right? Like, the answer is probably yes. And so I haven't really dove too deep into SoFi's financials or anything. It's just one that I kind of lightly pay attention to, but it's a cool company and one that I think provides valid services in the marketplace. And if we look at something like a Skyworks, they have got the double whammy lately. Like, obviously they recently they recently lost a big contract with Apple, and they had like a huge day where they were down like 25% in a single day or something like that. I think it was like back here maybe in August, or I think it was this one in February. I think that's when the announcement came out of they lost a big contract with Apple, and then boom, again, all of the tariff news. So Skyworks has been taking a massive hit lately, and just literally down 50% since January. Crazy. 52-week low. You know, Skyworks is a stock that I did own at one point a long time ago. But honestly, it's looking like I might want to get back into this stock because, you know, has their business moved at all in 5 years? Like, from 2021, has their business moved? You know, like, obviously, I think they have had some financial struggles, actually. Yeah, like revenue declines and other factors in the business. Again, it's not one that I've looked too deep into, but it might be one that I start looking a lot more into, because scooping up shares at Skyworks at a 16 PE ratio when they're at only an $8 billion valuation on this thing with $4 billion in revenue, where their price to sales is what, a 2? Price to sales is trading at a 2. Like that, these valuations are looking so good, guys. Like, like obviously there's financial struggles at the business, but now's the time that you'd step in and pick up these shares, and then, you know, 5 years down the line, that's when you're really benefiting from that. And for example, I guess just to show something else really quick, because I just thought of it, but Palantir is one stock that I've made relatively good money on so far, right? And I was buying, like, last time we were in a bear market in 2022, this is when I was buying Palantir. This is when I was getting Palantir shares for like $8, right? That's when I really started to build out that position. So that's where these opportunities are coming up, guys. And if we look at like Nike, oh my God, Nike, poor Nike. They've been getting just absolutely hammered lately. And obviously they do lots of manufacturing in China, and they're a worldwide brand, and they ship products all over the world, everywhere. So I can totally see how the tariff announcement has continued to just hit their business model so hard. And they're dealing with other factors at their company right now too. I just made another Nike video. So Nike is in a rough spot, and like super cheap though. Their valuation is getting ridiculous. 57. This thing was a deal to me at like 90, 80, 70. And so to see it trading at like 75, and somehow they were up on the day. I think there was some type of news with like manufacturing deals or something that somehow Nike was up the last trading day. But that's also trading at a 52-week low. Costco's one that I would love to actually own. I'm not going to lie. Costco's a stock that is a beast. They're just such a beast, dude. On a 1 year, they're still up 30%. And they've only lost gains. I think they're trading flat on the year, right? Like everybody else is down like 20, 30% on year-to-date charts, or like even 50%, like some of the stocks that we were just looking at. But Costco's like just the beast, and they maintain such a steady valuation. Even like it takes a lot for Costco to drop, and it would have to be something very company specific that, like, I don't even know what, to cause Costco to go down a lot. But this is a stock that I would personally love to own, and it might even be one that I kind of somehow work into my strategy here pretty soon. A $400 billion company with $264 billion in revenue, so their price to sales ratio is under 2, which is ridiculous. Their PE ratio is relatively high, though, and that's one thing that I've always kind of looked at for Costco is I've kind of thought they had a PE ratio, because if you compare it to something like a Walmart, like they do trade at a much richer valuation than a Walmart. So I don't know. Costco's one that I would love to get invested in, and love to see that in my portfolio. Like even like, you know, because I have a lot of tech stocks, right? Like if I swapped my Apple position for something like a Costco, that could be a potential move, or something like that, you know. But I would love to add Costco into the portfolio at some point relatively soon. Now, they're not at a 52-week low, which is kind of the stocks that I'm trying to showcase here. But if they dropped, if Costco continued to drop, you best believe I am absolutely buying shares. Now, the last one that I want to go over quick is Microsoft. You do not get opportunities to get into Microsoft at 52-week lows that often, right? But it is definitely trading at a 52-week low. I think it literally closed or probably hit, the last trading day was a 52-week low. Now, it's still trading at about a 30 PE, so slightly above the S&P 500 average. $2.6 trillion company, so right in line with Apple, $261 billion. And if we look at Apple, so price to sales on Apple's probably a little bit lower than Microsoft. But Microsoft, solid company, right? They build lots of software products that people use daily around the world, lots of hardware. I'm not exactly sure how their supply chain and manufacturing facilities are structured, but I'm sure there's lots of manufacturing done outside of the United States. So, I mean, just opportunities almost across the board here, guys. And this is the time in the market that, you know, as an individual investor, it's pretty exciting because now's the time that you get to build out positions and get to drive down your average cost on stocks that you already have. And just, you know, the age-old saying in the market, and one, if you get nothing else out of this video, be fearless when others or be fearful when others are greedy, and greedy when others are fearful. It's the Warren Buffett saying. It's just, you know, look at the fear and greed index. I'm going to pull that up really quick again. Right here, you know, when the dial is all the way over here, basically consider that a buy time in the market. And when it's at extreme greed, so there's like euphoria in the market and everybody's buying everything and stocks are going through the roof and you could buy any shitty company and make money, that's when you sell, all right? That's kind of what that saying refers to. So take that away. Take away that volatility is the price of admission into the market. It's something that you're going to have to learn to deal with, especially if you want to put yourself in the best position possible to be successful in the market long term, which is what the goal here is, and it's what my goal is, and it should be yours as well. You know, I'm not here to get rich quick. I'm not here to make money and try to short the market and play short-term call options. Like maybe I'll get into like options trading, you know, at some point, but for now, I just like to buy and hold companies that have good competitive advantages, you know, and try to get into at a solid price point where I think it's undervalued, and then hold for the long term, stomach the volatility. You know, this is just a little bit of my mindset for the market, and I think that should be what your mindset is too. So I think that's basically everything that I wanted to cover in this video. Thank you so much for watching. I do have some interesting content and some really good content coming up this year that you're not going to want to miss. So subscribe to the channel, drop a like on the video. I wish you all the best of luck on your investment journey. Peace.